Good morning, everyone. This is the Plan Your Trade video for November 1st. That's right, we're in November. We survived Halloween, and we are going to start the end of the year run here. We got about 60 days till the end of the year. We got about 3, 4 days till the elections. Things are going to get pretty interesting. Okay, so we are starting off with the SPY chart. Let me show you what's going on with the SPY cycle patterns. We are in a crush pattern today, in a trending mode. We have now gone to bearish, explosive bearish, with a daily bias of bearish, a weekly bias of bearish. As I mentioned to you earlier, a crush pattern is typically a pretty strong down day. And I really do believe that we're looking at a pretty strong breakdown move here into Friday. Good, solid downward trending. You can see we've already started it. It looks like, let me spread this out. And you can see we've already kind of started this downward move. Looks like it really kind of broke down on the highlight that I mentioned here, 11:30 kind of yesterday, and or going into very early morning today. We'll have to take a look at the news. I know we have news today. Like I said, it's super early out here in California. I haven't really looked at too much yet. I really try to avoid the news, but sometimes news is important. But again, we're getting this big breakdown. We're down 0.5% already. Sorry, pre-market 71. Sorry, no, we're not getting this breakdown yet. We're up. Again, let me correct myself. We are up in this area, holding up 71, 571.30. So correct myself. We are holding up. We are still moving into that rolling pattern today. Looks like we are going to open probably back in this 571, might maybe 569 area, 570 area. So right around this area. Sure did look like a pretty big breakdown right here as of the end of the day yesterday. So remember, we're in this consolidation. I highlighted this consolidation was taking place over here. Let's see what happens this morning. In reality, if we've been overnight, in fact, let me come in here and let me come in here and try to get to overnight session. So here we have the overnight session. And you can see here, if I move my rolling expectations downward here, indicating that we are now down into consolidation here, which I will just redraw. So here's our flagging. Here's our breakdown. Here's our consolidation, potentially. And again, if that is now the case, assuming we've hit this base, you can see where we're at. Breakdown flag. See, that doesn't qualify because that's not lower. This would have to be the qualifier. So we would have to look at this as flagging. And that would mean that we would have roughly a 100% move equaling this. And if I come over here and drag this down off of flagging, that puts us in the 557, 558 area, maybe 556 as a downward trend. We are going to just have to play it by ear here. In other words, see what comes, see what is in front of us. We are not going to try to lead this market. I still believe we are in a downtrend. The crush pattern would typically be a downtrend move today. We're in trending mode. We're in crush. I would view that as a downward cycle trend. And like I said, we are moving into that overnight session here with some consolidation. I think that's going to mean that we consolidate into the early morning trading session and then attempt to make a real solid breakdown. So now let's take a look at the QQQ. So I would be concerned of a bigger breakdown here. And let's look for any signs anywhere else. Japan is up, not by much. German is up, Euro's up. Everything's pretty flat. Again, end of the week here before the election, people are going to be really trying to protect their capital. So, and I think we have low liquidity, like I've been telling you. And I think we're going to be seeing some pretty volatile moves. So let's go to QQQ. Big breakdown yesterday, moved right down into the area that I think is going to be, or I thought was going to be our support. We need to watch for a further breakdown, guys. I mean, really, I'm going to just tell you right now that, yesterday's move was aggressive and came right down into my low areas. That's where I thought of right here. I'll leave this here, make it purple. This was my original low price target area. Now, if we do get extended selling like we need to see, remember, this is a new price high here. So, we haven't seen any flagging. What would happen is like I drew out here, we would look to get flagging like this in the future. Try to make that a little different color. We need to get flagging like this in the future. Come on, Brad, pick a color, any color, dark purple. That would flag out like this. But in order to do that, we have to establish some low. Okay, we've already been through the Fibonacci ranges and we have them back over here. We're at the 382 level. We could come down into the 618 level, down into this area on a very deep low. Okay, so be aware that that's something that could happen. But this 50 level, this 478.84 looks fairly well primed, meaning that we could come from today. If we get that crush carryover, we could get a move below that 578 area, maybe down into 575. And let me redraw this because I'm drawing it like we've blown past the election. And again, this is 1 hour and this is November. Okay, so this is very early. Let me draw this up here, more towards midday. And so you understand that we could see a very strong selling phase today coming down into this area and then trying to build a base. Okay. And again, what would happen here with let me draw that again, kind of building a base. What would happen here is that we would literally be looking for that flagging in the QQQs. Because we've had this new higher high, we can't constitute anything else as flagging to the right of this. We would be looking for a peak, coming down, setting a low, moving into flagging, and moving into flagging. That's what we want to see. We want to see that type of formation to set up a new excess phase peak pattern, and we just don't have it yet. We're in the breakdown pattern. Now, obviously, we've broken down to new lows. Okay, this is a new low, closing price low right over here. We're taking out these lows. We're going to then be targeting these lows. Is the next major low right here. This is should be right on our radar. And of course, if we take out that low, then look, we're going to come down here and take out this 618 level. That's our next low. So Fibonacci price theory is falling right in line with my concept of downward price legging into this 578 area, 578.40 to 571.75 roughly. And if we did get down there, I would be very strongly expecting a flagging pattern because markets just don't move typically into huge corrections unless there's some level of panic. Now, my panic indicator moved down yesterday. I talked about this a bit. Looking to see some real breakdown overall. I brought gold up here to give you an idea of what's going on. But again, we're not getting anything massive yet. Massive would be kind of like this big breakdown. So we haven't seen that yet. We have seen large volume yesterday. Kind of think we're going to see the same thing today. A little bit big volume, trying to clear out. Everybody's trying to clear the room pretty much with the market. So we'll see how it plays out. Gold and silver overnight. This is my little custom chart. We're flagging beautifully. Remember, we had gone into this number one, set up the peak. Number two, coming down into flagging, which was right here. Number three, the breakdown of the flag, setting up a new low, which is right here. The number four, consolidation before the breakdown, perfect. And then number five will eventually be the ultimate low. And same thing is happening over here. The number one setup, the number two flagging, the number three breakdown, which we've already got, the number four consolidation, and then ultimately down here, the number five ultimate low. So metals are setting up very cleanly, right kind of where I talked about in terms of consolidating, basing, and we really have to watch these timelines going into today. Okay, this is overnight, a little early. We talked about this being, 6 a.m., 8 a.m. Eastern time, 1800 today Eastern time, and then we have 700 on the 4th. So we could get a breakdown either today or going on into Monday. But the next breakdown move is going to be pretty much like this. It's going to be this downward trend. Where am I? There it is. Going to be this downward trend, it looks like, in metals trying to set up this low. And I really believe that, the news is going to sling. We got, like I said, I think we got CPI today. I think we got jobs. It's Friday. Typically have jobs data. So understand that, we're really looking at a pretty wild close to the week this week. And again, you take a look here at silver moving back down off to these lows. Yeah, it would be painful after getting to 35, watching it go down to 31 would be painful, but it would set up a monster rally. I mean, what happens after these painful type of contractions is that we get these just monster rally. Normally we'll come right back up to this level and then we'll climb 20, 30%. So, I mean, as hard as it is to watch this, you're looking at a pretty good move. Maybe up into 37, 3,800. Same thing here with gold. If gold were to come down into the 2,700, 2,710 area, you would be looking at a breakdown followed by an almost immediate rally, followed by a big rally carrying up. So we have a lot of opportunity here, guys. It's just a matter of getting through this election and being protected. Now, remember back over here, remember my original hedging. Remember when I started warning about hedging? Hedging. There was an area right up here. I warned you, hedge short. I even suggested picking up some put options in this area. And I started to hear from clients and friends. They actually did, and they're doing very well with these positions. I'm very happy. That's what this is all about, helping you become a better trader. And remember, I projected all of this weeks in advance. So, it's not like I'm making it up hindsight. This has all been out here for many, many weeks. Now we're looking at the breakdown. And I'm going to urge you to not try to buy into this level yet, simply because we've got this flagging pattern, this number three pattern, which will ultimately break down in the breakdown mode here. Though this is actually the flagging pattern. And we will ultimately come down to this number five pattern here. Make it a little bigger. and we will try to find this ultimate low somewhere below that flagging pattern. Ideally, I think we could be looking at, this area, 560, and or this area, 557. So you do need to prepare into this buying the hedge, and you do need to prepare for this number 5 breakdown ultimate low. It is in the works, ladies and gentlemen. It's already playing out right in front of us. We just need to be kind of cautious about this move so far, and don't get trapped into thinking that this is a rally base setting up here. Probably is not a rally base setting up here. Okay, so now we'll go to Bitcoin. Bitcoin's off 107. Big rolling pattern. Okay, so here we have the bottoming setup. Potentially, if we look at this flag, let me redraw this so we can see clearly. And it's good to do this because we need to be able to see what's actually happening and kind of redraw this occasionally. I'll leave that. Okay. Come over here. We come up to the peak. Look for this peak here. Come down here. Look at this mode. Look at this flagging. Very clean. Can you guys see that? I mean, that is extremely clean flagging. Actually, beautiful setup. Then we get, and I marked this earlier as flagging here into consolidation. It looks like it's moving into a different structure. Then we get this breakdown here, moving into consolidation. And so that means that we are looking at the 3 move is the breakdown into consolidation, the 4 move is consolidation, and the 5 move is a breakdown even further. So there's our flagging. There's our perfect excess phase peak pattern. 1, 2, 3, 4, moving into flagging, looking at flagging to set up across this area. And of course, we could move higher off of this low, this ultimate low, whenever we get there. So the ultimate low pattern would be, get rid of some of these lines. The ultimate low could be, down in this area. More than likely, it's going to be back in the 66 area. And the reason why I say that is very simple. Okay, I can take a look at this flagging breakdown, roughly averaging from rejection points. So let's go out here, make this a light purple, make this 4. And then basically all I need to do, guys, I want to see how far it's going to go, is drag this from the breakdown point, hypothetically, into this area, and there's your 100% move. So 100% move would be 66,000, roughly 66,100. And again, I'm just teaching you about Fibonacci's. I want you to start seeing things in Fibonacci, in structures. So, a good example of Fibonacci, let's come over to a blank chart here. Okay, we can just use this, get rid of these. Oop. So when you start looking at price trends, start looking at trends that focus like this. From point to point, figure out where the middle is. Try to draw a line across the middle. That's the first thing I want you to do visually. That's called the belt line. In Japanese candlestick terms, it's the control line. You control the belt line. You control the belt line, and you control the market price. So market price staying above this 50% level means that you have strong potential to the upside. Falling below that 50% level means you have weakening downtrend to the downside. So you can look at any trend. You can look at any move. Here, you take a look at this move, I can draw the 50% level roughly right here. I can look at a tiny little move like this, and I can draw the 50% level right here. I can look at any move like this, and I can draw the 50% level right here. I want you to get in the habit of looking and being able to draw from here to here. I'm just looking at the 50% level, roughly right there. Okay. I want you to be able to do that because that's going to help you visually see, where markets are trending. Now, ideally, like you said, we're looking at gold here on a daily chart. So remove all trending. When we take a look at gold and you start looking at these trends, from here to here, we move into the 50% level, roughly right here. The 618 pullback would roughly be here. You see how we stay above that move? Then you can see we move up here, the 50% level here, 618 level would probably be about here, 382 level would probably be about here. And I'm registering from here to here. So it gives you an idea of how I visually see that we are staying up. We are building these kind of ascending pyramids into the upper trending mode of the market. Can you see that? And each ascending period moves substantially higher than the previous support area. So when you look at this support area and you say, okay, we move into this ascending pyramid, briefly comes down to the 50% area, rolls. Okay, so we're probably running into some resistance here, which we did right across this channel, still stayed above this longer channel over here. And that's what I'm looking for. As long as we control the belt line, which again is this, you get rid of this, get rid of this. As long as we control the belt line, price is doing very well across the belt line. I'll draw here. We are still in control. So now we've got to clear this level. Where's our belt line here? Our belt line here is pretty much right here. Pretty much right there. And as long as we are still in control of our midpoint, our 50% level, our belt line, meaning above it, we're still in bullish trending. Now you can see we get some rolling here. So how do we interpret that rolling? Well, it's struggling. It's struggling to try to find price. And remember, price always attempts to find new higher highs or new higher lows. So what you're looking at here is this would be our ultimate low is down here. Our ultimate low based on Fibonacci price theory is right down here. So we have yet to break through the ultimate low, way down here. The ultimate low is the last major low that has not been touched in 40 to 45 bars. The ultimate high is right here. We have not touched the ultimate high yet since we set it right over here. Prior to that, our ultimate high was right here. So I'll draw that for you. I'll set these belt lines a little bit different, make them kind of purple. Oops. And here's another one. Okay, so what we're doing here now is we're kind of dissecting the market based on Fibonacci price theory. And so now, as we're rolling through these cycles, you must understand that price is always attempting to set a new high or a new low. Okay, this is our new high. This is our rejection high. I'm trying to teach you guys the difference between a high price and rejection. So high, low are unique price points for analysis. Rejection points are often very solid analysis alternatives for skilled traders. So I'm teaching you about rejection. And rejection is the idea that price comes up and hits a rejection point. So, the whole idea here is when you're looking at a high price like this or these highs up here, I see that high. I know it's hard to miss it. But what's kind of more important is where price rejected. So you see this up, up. Let me spread this out. You see this here up bar, pullback bar, up bar, pullback bar, up bar, pullback bar. So where I see rejection is right here across this pullback range where price has actually failed. Can you see that? That to me is the rejection range. So when I'm going to look over here where price has actually failed, it's right in this area. That's where it shows in this area right there. Those show that price has actually failed to move lower. Has gotten lower, but then immediately rejected. Has gotten lower, but then immediately rejected. So when I do my Fibonacci's, I'll go from rejection point to rejection point instead of from high to low. And that sometimes gives me a little bit better representation of price. And I want you to understand that rejection is nothing more than looking at price. And this goes back to a theory taught to me, and I've shared it before. It's called failure to fail and failure to succeed. So it takes a little bit of practice to understand this, but failure to fail means that oop, we were on gold, I think. Yep, I accidentally changed the symbol. Uh, Success and failure to succeed means failure. So understand that this is a theory of, you can call this A or B. This is the root cause of all trading decisions. When you get right down to it, everything is success or failure. Everything is failure to fail or failure to succeed. You can't have any other outcome. You're either right or you're wrong, and you have to make adjustments as you go. So, what we're going to do as we're moving forward through this analysis, and I didn't mean to spend so much time getting sidetracked, is we are going to watch gold now moving into this consolidation 761. We are now going to watch for gold to move into a deeper downward breakdown because we have set that flagging formation off the 1 hour, and I will draw it for you here. So here's our excess phase peak pattern setting up, rallying up. We set a new high. We come back down. We flag right here. We break down. It looks kind of crazy, but here's our rolling consolidation leading to a breakdown. And why is this such a important little flag? Oh, well, it's kind of hard to see, but this is an actual dual topping pattern. The fact that gold moved down, came back up, rejected off this double top called a tweezer top pattern in candlesticks in a solid flagging and broke down indicates that we are cleanly moving through the excess phase peak pattern in gold. And we had this big breakdown into flagging formation. Now, this flagging formation can be large. I mean, it can be anywhere into this area, really. We'll just keep it a little below the breakdown level. Can be really anywhere into that area. So you could have a lot of range for this flagging formation or this consolidation formation here, but ultimately it should break down into this 2710, 2720 area, or it should ultimately break away from this level and begin to rally. Given our crush pattern and our gold pattern here, which is a gap stall revert flush, that leads me to believe that we're going to be seeing, some sort of a gap stall reversion. Given where we're at, the reversion here and the selling pressure in the markets will likely stall out a little bit here and then revert back downward. Why are we reverting back downward? Remember, the cycle patterns are daily. So when we look over here, auto scale, a gap stall revert flush would to me indicate that we are going to move into this 50% area. And again, use your eyesight, use your common sense. You see how I drew that? Right at 50% from the rejection areas. So that means 2710, 2720 is our target. I don't even know how much time I have left here. Ooh, 30 minutes. Okay, Bitcoin is kind of doing the same thing, stalling. I think I've already gone over it. Yeah, going down here. I'm at 30 minutes. I got to go, guys. Go get some today. Been too long. Hope you enjoyed the Friday extras. Talk to you later.